Hey everybody, how's it going? Today I'd like to discuss what's been going on with eToro and Robinhood. So yesterday I discussed that eToro was adding 20% stop losses to people's orders, which is really strange. That's something that I've never experienced with my broker or any broker since I remember first signing up with one when I was 18 years old. Usually you trade your account the way you want to trade your account. If you are not on margin, if it's your own money in the account, you will choose when to sell or when to buy, not someone else. So placing a mandatory stop loss on your order is weird. Now, obviously, hindsight being 2020, if they stop lossed you out yesterday, you're probably better off than you were today. But it's not like the broker knows that. They can't see into the future for you. And a lot of people were aggravated because the stock was at 260. It fell down to about 213. People got stop lossed out against their will and then went right back up. So if you watched it go right back up after it stop lossed you out, you would be quite mad. And a bunch of people had emailed me and sent me messages about this, and this is also showing up all over the place in the eToro subreddit. So what I did over here is I had a bit of a back and forth conversation, and he managed to actually get a refund for the 20%. So the amount that he was stop lossed out of, they actually refunded the difference to his account, which is interesting. So it says, "Hello, this may be a dumb question, so I apologize in advance, as I'm an inexperienced trader. I had a trade with the position ID above, closed by hitting stop loss, without there being any stop loss set on the trade. The trade was not leveraged. It seems like it was closed when it hit 20% loss. Could you please explain if this was closed in error, or if there is an aspect of the story that I'm missing? Thanks in advance and best regards." He quickly follows up saying, "Hi, I'm following up here. I saw the blog announcement, but I don't think it's within the right of eToro to close my position of a stock where I own the underlying asset. I see there are several people affected by this. I also noticed that for the duration of the aforementioned trade being open, the sell button was inactive for that trade. What's up with that? Forcing a trader to not be able to sell and then to sell at an unintended value is not acceptable. Should I be glad that this happened with a YOLO $68 position on a meme stock? Should I be worried that this could happen to my other, more significant positions as well? Just because a risk manager decided this was not communicated in advance, even if the forums explain it away with a lack of enough cash balance in the account to cover the trade for a second time, this was not communicated, not just in advance, but at all. The rules were changed and were then half-assed communicated via a buried blog post. Again, this is not acceptable. Please revert at the earliest possible time." And it looks like they actually did revert this person's trade because, as I see here, the response that he received was, "We would like to offer our deepest apologies for the stop loss error that occurred on February 1st. You will receive a refund. On Monday, February 1st, 2021, the maximum stop loss on some stocks was set to 20%, in bold print, in error. This issue only affected users who opened positions on specific stocks. On February 1st, before 17:19 GMT, when the issue was identified and resolved. Since one or more of your positions were closed due to this error, we will refund $13.60, which reflects 20% of the total invested amount. You may choose to use these funds to invest in a new or existing position. Once again, we would like to apologize for the inconvenience caused and to thank you for your understanding. Sincerely, the eToro team." Now, again, technically speaking, if you look at where that stock that he invested in was yesterday and you look at where it is today, he was probably better off for the fact that he was sold out yesterday, even if he was forced out yesterday, because that would have allowed him to buy back in today at a lower price. But again, is it the broker's place to say that? Is it the broker's place to do that? He also could have performed a trade where when it went down to 213, then back up to 260, sold at 260, and then bought back in today. It's not the broker's place, in my opinion, to do the buying and selling of stocks for customers or to be setting stop losses for you on accounts where you are not on margin. And I don't see where this is something that is acceptable. And I am happy that they responded quickly to this gentleman's complaint and refunded him his money. There are several people that appear to be being refunded their money as a result of this getting more and more attention. Now, what is bothersome and worrisome to me about what happened here is that yesterday, just yesterday, they gave a response to this issue that, as you can see here, is your fairly standard copy pasta, lobbyist, weasel words kind of thing. In the last few days, there have been a large number of comments on our feeds about the closure of positions. We want to take this opportunity to clarify that it's never eToro's goal to close positions. As an online investment community, we enable our users to participate in the capital markets. Manual positions on our platform is kept open as long as the request to take profit or stop loss rates are not reached in the market or a manual request is not made to close the position. As a regulated broker, we must always act in line with the regulations of the regions in which we operate and the scope of the market we offer. And then it's just kind of your standard PR copy pasta legal speak over here, and this is seemingly bullshit, because today we have this posted over here. Then after you had someone probably review the account that was not a PR person, you had someone who was actually understood that what happened was pretty bad and wrong, and they said, on Monday, February 1st, 2021, the maximum stop loss in some stocks was set to 20% in error. This only affected users who opened positions on specific stocks on Monday before 17:19 GMT, which was pretty much the email that they sent back to that user. So they corrected what they did that was wrong. And there are people on their forum that were fairly aggravated and pissed off. It says, you buy a lovely house to a broker. The broker then sells the house that you just bought and own at a 20% loss without your permission. Now replace house with GameStop shares and broker with eToro. See how messed up that is. Now, granted, I am happy that they did correct it. It's a good thing that they did correct it, but I really do think that this is going to be a catalyst. This past 2 weeks is going to be a catalyst for people to understand and recognize how important it is to use, for lack of a better way to put this, a big boy broker. Because there are brokers out there over the past 2 weeks that were not adding stop losses to stocks, that were not lying on the news when asked why are you not allowing people to purchase stock, or do you have a liquidity problem, that were not limiting things at all. And one of the things that I mentioned in my community page is that there's a lot of people right now that are realizing that it's probably better off to pay a commission for a trade than deal with all of this crap. I would personally rather pay a commission of $7 or $20 or even $30 every time I make a stock trade than have to worry about any of this stuff. And this is probably going to be a bit jumping to conclusions here. So the part that I say after this is just take with a grain of salt. But one of the things that I've noticed, at least with my generation, is that my generation growing up with the internet in 2000, 2001, 2002, 2003, sometimes I wonder how complicit we are in this happening. Because I remember when Napster came out, I remember when Kazaa came out, when Nutella came out, Emule was popular, Usenet, you're not supposed to tell anybody about Usenet, but it's the best of all of them. And you had a lot of people arguing that, let's say, I don't want to pay for this movie, I'm only going to see it once. I don't want to pay for that TV show, it's not that good. I don't want to pay for the whole album, even if it's just one song that I like. And I kind of think about it. Like, let's say that's true. Let's say I don't want to pay for the whole album if it's just one song. You know, if I think of like one of the best songs I've ever heard, like, would it be worth $15 to buy the album that has that on it, even if the rest sucks? I remember growing up around this, and I remember this because when I was younger, I was one of these people that was on the forum saying that, you know, the difference between a 13-year-old and a 32-year-old can be quite different. And I kind of remember growing up in this culture where people were looking for every reason that it should be okay that everything is free, that if you want to make money, if you actually want to sell a CD and you want to make money off of that you're a greedy asshole. And to be clear, I'm not trying to defend Hillary Rosen or the music industry in any way, shape, or form. They did every single thing they could to resist the digital revolution. They did everything they could to resist allowing you to actually download music. And when they would offer services that would allow you to download music, there would be limited selection, it would be really low bit rate, it would be stuck with digital rights management. It was horrible. But that aside, all of that stuff aside, and what I noticed is that the business models that started around that time were business models that did not ask the user for money. So I remember this first with Gmail. You know, Gmail gave you a gigabyte of storage and allowed gigantic attachments, and it was completely free. But it was like, I remember at the time, they would have the bots search through your email, and there'd be ads on the side that were pretty much based on what was in your email. And like, that was the first time that I remember in my coming up in the internet, it being okay that I wasn't paying for a service, and as a result of not paying for a service, I then became the product. And this kind of really snowballed on over the past 15 years, I think, to where with a lot of the items, the operating systems, the platforms that we use, we take for granted that they're free, and forget that in many ways we are not the customer, we are the product. And the product doesn't get treated as well as the customer, which brings me to Robinhood. So Robinhood makes a good amount of their money from selling order flow, meaning other people see every single one of your trades. But what you're losing by not paying for your trades is the ability for them to just say, you can't buy this stock at this point in time, because in my opinion, they're not a real broker. So Robinhood lifted restrictions for a lot of stocks today. So I remember BlackBerry was on this list at one point. BlackBerry's gone. I shit you not, General Motors was on this list at one point. Again, someone explain to me what makes General Motors a meme. At one point, General Motors was on this list. But Robinhood just lifted a bunch of stocks from this list, and I am kind of curious to see what happens with the volume of these stocks. Does the volume of the stocks that were restricted over the past 3 or 5 days wind up going up or stay the same as a result of Robinhood now allowing people to purchase in again? And again, as all conflicts of interest aside, I do own BlackBerry shares, so I'm kind of curious to see what happens now that it's no longer on this list. And so is BlackBerry, who's sitting right here, who's my kitty. This last week, I really hope drives home what happens when you are not the customer, but you are the product. And I think that we're starting to kind of bend the curve a little bit there, where a lot more people from my generation are just going to say, you know what, fuck it. I would rather pay $10 a month, 20 months a month, $30 a month, $50 for the service, $100 for the service than be the product. I think 2021 is going to be the year where we hit peak. You know what? I'd rather just pay for it. I'm sick of it. I'm sick of it. This is a failed experiment. Let me just pay for the fucking service. I'm sick and tired of being the product. And several people have commented in my my community post saying that I am very naive to imagine that at this point the companies wouldn't make us the product anyway. And touche, touche. Perhaps that is the case. Perhaps we are at a point where even if the company charges you for the product or the service, that they're still going to try to sell our information or still try to do all this kind of shady shit, regardless, because that's the kind of corporate culture that we live in. And I really hope that that's not the case. But let me know what you think in the comments down below. That's it for today. And as always, I hope you learned something. And again, this is not financial investment advice. I'm not a financial investment professional. This is just my opinion. In my opinion, if you're still using brokers like eToro or Robinhood or any of these others, just my opinion, purely my opinion, I would look into getting a real broker. I would look into getting a broker where you pay for the trades, but there's no funny business. There's no bullshit. We're not well enough capitalized. They're not liquid enough to be able to allow you to buy something if it starts getting higher volume or deposit requirements. We're not going to randomly stop loss you out of the trade or anything like that. Think about it. I mean, if you're in the market, if you're, because here's the thing that I don't get. When I look at a lot of the stuff that I see on Wall Street Bets forum or some of the investment forums, if I were looking at posts where people were posting accounts that were worth $50 or $100, I would get the whole no commission trading. When I see people with accounts that are worth $60,000, $200,000, $800,000, once you're at the point of having 5 to 6 or 7 figures in your bank account, what would you rather have? Someone you could call and yell at and speak to who is there for you as your representative when something goes wrong, or the ability to not pay for the trades? Robinhood got a lot of people into investing. Maybe that's a good thing. Maybe that's a bad thing. But I think that that's here to stay. And one of the things that I think needs to happen now that those people are involved in investing is that they move over to proper brokerages where they will be treated better. Just my opinion. Now, that's it for today. And as always, I hope you learned something. BlackBerry says bye. BlackBerry, good girl. See, she's looking up. She's going up. Go to the moon, BlackBerry. Go to the moon. She goes to the moon. She has a better chance. Oh my God, she's biting the microphone. Oh my God. You are vicious. You are vicious. That's my kitty. I love my BlackBerry. I love her way more than I love the stock right now. Anyway, that's it for today. And as always, I hope... Oh, my God. Oh, Jesus Christ. Okay, she really doesn't want me to hope that you learned something. Eric, she's biting the microphone. You insane little kitty.
She will not be silent.
Okay, this is cute. BlackBerry, don't show your ass on camera. Be a lady. This is not an OnlyFans. Blackberry, be a lady. Blackberry? Good girl. She's giving my wrist little kisses. She is so cute. She is so effing cute. She is so effing cute.